Let's get right down to business. You have a new short position. It is in what stock?
It's in OSI Systems, which most people would better know it as the maker of Rapiscan, which are the airport scanners and scanning equipment.
What's the issue with this company?
So we think this company is rotten to the core. We've actually caught, so
not mincing
game,
words.
set, match. Yeah, no. We actually have what we think is smoking gun proof that when this company got a key turnkey contract a few years ago in actually Albania, but it's worth 150 to 250 million top line, that they paid a bribe or kickback of almost half of that concession. And so that's, to me, this is damning evidence. Then we also look at the major contract these guys have is a turnkey contract in Mexico. Now that's up for renewal next year, possibly early part of the year. And the pricing on that appears to be egregious. And a lot of investors don't understand the economics of this because the company has not been very forthright about it. We estimate that one contract in Mexico is worth about 50–55% of the company's EBITDA for last fiscal year. So if that goes away, it's a big deal. And just to kind of put a punctuation mark on how egregious we think the pricing is there, we estimate that the EBITDA margin on that Mexico contract is a 55% plus EBITDA margin, whereas the rest of the company's business, it's about 7.5% margin. So if you own OSI right now, you're basically owning it for this one contract in Mexico that's up for renewal and should be looked at very closely.
So let me be clear. You believe you have found evidence of bribery or kickbacks in Albania, and if I understand you correctly, the pricing on the Mexican contract is suggestive of something similar?
So we have Albania in terms of what we think is a smoking gun. We've also spoken to a number of former employees who painted a picture of this company as just, within the Rapiscan division anyway, constantly breaking rules and crossing the line. So if you take a company that does business in that way, and you look at this contract in Mexico that's 15% of revenue, but again, we think about 50 to 55% of EBITDA, you have to ask yourself, Mexico, massively fat contract, why is that contract so fat? This really should be scrutinized upon renewal.